We're here with Tim, the Source Anderson. Tim, we have new highs in the S&P yesterday, but the one question is, should we buy at these highs given that we have the sometimes volatile non-farm payrolls on this Friday, and we also have some uncertainty with this China trade deal?
Well, certainly, and I think that this employment number is going to be scrutinized very closely. Clearly, we had a shortfall a month ago, and it's very likely that we'll still see some pockets of weakness this month, primarily in probably in manufacturing and in construction. That's where the majority of the slowdown has been. Now, in terms of the China trade deal, the market is going to be very focused on that and very focused on exactly how much progress is being made over the next few weeks and months as we've got China now back at the negotiating table following Trump's meeting with Xi at the G20.
Yeah, it's my way or the Huawei.
Right. And I think that there were a couple. He's getting some negative blowback on that from some of the hardliners on Capitol Hill, even from his own party, obviously. And I think that one of the preconditions to get them back to the table was to say, look, we're not going to put out this other $325 billion tariffs on this extra $325 billion right now, although they didn't take any tariffs off. And also, we're going to lift the unilateral ban on U.S. companies doing any business with Huawei. Look, for all practical purposes, if they wanted to take the hardest line possible with Huawei, they could probably almost put them out of business just by restricting. There's probably 10 to 20 big tech companies, chip makers, component makers, and everything from Qualcomm to Broadcom to all the other major component makers in Silicon Valley. There's a roadblock and we're just not going to get there with the trade negotiations, then we don't have to talk about the Huawei, which is probably the toughest part of the negotiations when we get there. But they are still going to be under the microscope. In fact, just this morning, a Huawei executive in Poland was arrested for spying. So this is not an issue that's just going to magically go away. And this is amazing that it's a company that a lot of people in the U.S. weren't even familiar with unless you're in the tech industry, 6 to 8 months ago.
And now we are, and most of the Americans can pronounce it now because of all this trade drama. That is some fiery statements that you have made. Tim, let's move on to the transports. FedEx has been a great leading indicator, and from what it looks like, the stock is rolling over, and that could be a big indicator of where trading volumes are going to go. What do you expect?
FedEx got a nice little bounce yesterday after it was announced over the weekend that we were going to go back to the negotiating table with China. But FedEx also has other issues from other competition, potentially Amazon, and other intermediate delivery companies that have kind of sprung up in the big craze of doing Amazon deliveries. So they have some issues that they have to resolve, and FedEx also potentially has an issue that they brought up very publicly with the government a little over a week ago about the unrealistic operational considerations of them being able to identify what's in every package that might be coming from overseas. Now, if a big container comes from overseas, it's easy to open the container and see what's in it if you're a customs official. But if it's a sealed package just going through delivery channels from point A to an ultimate consumer, or maybe to a parts buyer, then you'd have to actually open the whole package and see what's in there. So I think they have a valid case with that, and it's difficult to see how that's going to be resolved without some trust along the way going forward. So,
well, whatever they're opening is better than what Facebook is opening at their headquarters, as long as there's nothing crazy in there.
That is correct. And, with companies like, Facebook, and there's going to be, just recently announced they're going to have a social media forum/conference at the White House on July 11th. That's an event that's going to be very highly scrutinized. A number of issues are going to come up. and I think that there are other issues with the behavior and then also the cyber monitoring from social media companies, and that is just not quite resolved yet. And there's some work to do on that issue.
Tim, TLT, the 20-year, has been in consolidation for the past few sessions. Where do you see it going?
Well, I think that what's going to happen is that the 2% yield on the 10-year, and I know you just said the 20-year, but the 10-year for 2% is probably going to be a ceiling in terms of price, a floor in terms of yield, and that we're not going to have a sharp move back up toward 2.25, 250. I think the biggest, and to bring that into how the stock market's going to react to that, I think that the biggest challenge for equity strategists is going to be whether we can have growth, good, solid economic growth with extremely low inflation.